Happy New Year and welcome to the final episode of the UTI Swatantra series powered by ET Now. I'm Faye D'Souza. What a wonderful year it has been. Our journey on the Swatantra series started a year ago when UTI Mutual Fund and ET Now decided to come together to create a unique investor education initiative. We travelled across the country and met with various investors and answered even the most simple questions to help them understand how to use mutual funds. Take a look at how we started this journey.
Good evening, ladies and gentlemen. I welcome you all to the launch of the UTI Mutual Fund Swatantra series on ET Now. This series is a unique and interactive investor education series envisaged by UTI Mutual Fund, which is in its 50th year of creating wealth and contributing to the financial sector of the country. Without further ado, I would like to invite Mr. Leo Puri, Managing Director of UTI Mutual Fund Asset Management Company, and Mr. M.K. Anand, Managing Director and Chief Executive Officer, Times Television Network, to come onto the stage and unveil the logo.
All of us at UTI know the importance of Swatantra. I think it's been one of the most innovative, I would say, initiatives that UTI has undertaken. I think with ET Now, I really hope we can take it now through an electronic medium and perhaps reach new investors that we had not touched through print and perhaps even connect with a younger generation, which is something, of course, we're very keen to do.
Taking the benefit of the stock markets, the benefit of mutual funds to Indians at large is absolutely congruent to what we at ET Now want to do for the channel. This is an initiative that we are very, very happy and very proud to be partners of, and we will ensure that it is sort of taken to levels way beyond what it is right now, because obviously the power of television, the power of marketing can take it into a different space, and India in 2015 and beyond is also going to take it beyond.
And now we would like to call on stage a few individuals without whom this event wouldn't be possible.
Well, immediately after the launch event, I had the opportunity to sit down with Leo Puri of UTI Mutual Fund. We talked about the general environment that India had at that point for investors and how you and I could benefit from the Swatantra series and become more empowered investors.
Having looked at previous bull market rallies in the country, going back 20 years or so, our sense is that what we are witnessing at this point is potentially something that could last 3 years, if not longer, in terms of a secular trend. So I don't think investors who have not participated so far should feel that it's too late. We are still very early in the rally.
UTI as a company, being one of the brands that are most trusted in the market right now, what are you doing to make sure that A, your intermediaries are passing on good, correct advice, and B, you're educating your customers to make educated decisions? It's
our responsibility to educate both our intermediaries, our independent advisors, as well as our end investors. And I think we have very clear strategies for doing both. In terms of product positioning, I think we very clearly clarify with all our distributors where we actually think specific products should be positioned, what their value proposition is, and the type of investor for whom they're suitable, and therefore how they should be ideally positioned or distributed. To the end investor, we reach out directly. Swatantra is perhaps the most visible form in which we do that, and the feedback that we have got is very positive because it's an independent platform where essentially independent experts and advisors share their views and guidance for households in India as to how they should think about products, portfolio allocation, redemption, saving for the future, and so on.
Leo, before I let you go, I want a word of advice from you to Indian investors who are watching at home right now.
I would say don't be unnecessarily risk averse and don't be driven by the cycles of greed and fear. Think about actually systematically investing, increasing your exposure to equity markets, but please don't allow this opportunity to pass you by.
A large chunk of the UTI Swatantra series took place right here in this studio. We brought together certified financial planners, financial advisors and representatives of UTI Mutual Fund. We talked to various investors and started with the very basics. How do you start investing and when do you use a mutual fund? Take a look.
Indians are great at saving, but we are not that good at converting these savings and putting it to work, which is where it becomes an investment. And I think that's the first step.
If I was starting today to invest for the next 15 years, what would be the most efficient way to do so?
Investment is a habit that one has to develop over a period of time and be regular and systematic on your investments.
What is then a mutual fund?
Mutual fund is a one window solution for all the investors, and there is everything for anybody and everybody.
Tell us what the different types of mutual funds are.
It is divided into two broad categories, equity and debt.
So tell me what goes into an equity mutual fund.
Equity mutual fund is something that you give a professional, a person, a money on a trust that you invest on my behalf, and he in turn invest into various number of stocks.
What are the asset classes available other than equity?
What we forget is instead of a bank fixed deposit, you have a bond fund. For short-term money, you have a liquid fund. And for gold, instead of having it in physical form, you can have a gold fund also, other than the equity funds. So this actually covers most of the gamut of funds.
What is the most common mistake an investor makes?
We as Indians typically are known to be good savers, but not very good investors. Now, saving in a fixed deposit or for that matter, savings account or current account like instruments does not really overcome the issue of inflation.
What inflation can do to my money?
Inflation is definitely something that is going to stay when you're making any investment decisions. You have to consider your returns post taking into consideration the inflation impact on your entire portfolio.
Since mutual funds are highly subjected to market risk, as we all know, can you throw some light on that?
The biggest risk, according to me, is remain uninvested or not invested in the equity market.
What is better, LIC or mutual fund?
It is not the question of saying which is better. Both are altogether different. If you want to have risk coverage, you should go to insurance company. If you want to have returns, you should go to the mutual funds.
Now, I have selected also a very good advisor who manages everything. But at the back of my mind, I always think that every time we make an investment, is it the right investment or not?
Trust is a very important factor in choosing your advisor. You need to have that trust with your advisor.
I've recently got married, and since both of us are working, what changes should we bring about in our approach to saving?
Treat that entire investment pool, income pool as one, bring in that discipline of not touching one spouse's income, get that completely into investments.
How is mutual fund better than an individual investment or a PMS investment?
So mutual funds, what they do is actually they enable you to pool your money with investors with similar interest, and then you can hire professional services to really manage that money. So you get the services of a professional, you can start investing small amounts of money, there's a lot of transparency, you will know every month where the money is invested, you can track the performance. So there are plentiful benefits of coming through a fund, and so building a diversified portfolio and with expert advice at a rate of 2.5%, I think that's a steal, right? So mutual fund obviously is a great start.
Assume I do have a financial goal and I've set that out. Then how do I go about matching an investment to the goal?
So it's important first of all to figure out what are your needs, and they could be wealth creation needs, it could be goals like you're saying, future financial needs. I think so once those are fixed, then you go about looking at the horizon you have for the needs and then building a product portfolio around that, mix of debt products as well as equity products. This is the tenure and the horizon you have to meet that financial need.
It's time for us to take a very quick break, but when we come back, we'll bring you glimpses of very special shows when we sat down with special members of audience and answered their questions. Welcome back. You're watching the final episode of the UTI Swatantra series powered by ET Now. While we did several of our shows right here in the studio, we attempted through some of our shows to focus on very specific needs. From our research, we found out that there are specific audience members and specific investors who need different advice. Women investors, for example, or doctors, or sometimes teachers. We even had groups of students join us in the studio. Take a look. Is it difficult to manage your money as a doctor?
Yeah, it's very difficult.
Tell us why.
Because we are not, we lack the knowledge for finance and investment. That is the basic reason.
When I read about these mutual funds, there are some balanced equity, debt. We don't understand any of those. It's a safer bet to go in for a mutual fund where you know you're giving your money to someone who knows where they are putting it.
When a patient comes to you as a patient, you would understand what is a diagnosis. You would just do a diagnosis, and then you may recommend a particular medicine from a particular company. This is how the advisor also works. So when an advisor comes to you and he analyzes your situation, your financial position, and then would recommend you what kind of equity product or debt product would be there, and he will choose from those 45 companies based on what fits you, know. So it's exactly like a doctor, the way doctor works.
As an educator, how can I advise my students, to begin with financial investments?
If you look at the different forms of investment, starting from a very basic level of a bank deposit, savings deposit, that's the first step of somebody understanding that, your money can earn money. Once the person gets into that piggy bank mode and then goes to a savings bank account and then goes to looking at maybe mutual funds, then looking at equity through mutual funds, and then perhaps equity directly, and then even more exotic things like gold will all follow. You have to start somewhere, and the earlier you start, the better. So I think there have been a few banks who've actually taken the initiative of getting young, very, very young depositors. So I think that's the start.
All those rumors are spread regarding the mutual funds, and now students, when I teach them, they feel as that this thing is not a part of their life as a science student. So how should I motivate them?
See, a lot of these investor awareness programs are happening, which is being mandated by SEBI also with all the fund houses to go out and speak on that. And I would urge all the educational institutions to make it compulsory for students as part of their curriculum to know something about investment. The earlier you start, it's amazing, what small amount you can save to get the same goal met than when you start later on in life.
My brother runs an SME. Expenses for the business are generally incurred heavily from the 1st of every month to 5th or 10th of every month. So what will you suggest what he should be doing from the 10th till 30th of every month to park the excess fund?
Liquid mutual fund schemes today in India manages approximately 2.5 lakh crores plus kind of a money. So most of the large corporates or maybe a lot of SMEs, they do invest their cash surplus into liquid mutual fund schemes for as short as 1 day. Today, mutual funds have made it so simple for investments. It's just on a click of a tab on your mobile phone. So everything is available on your fingertips, and yes, you can invest for as short as 1 day.
What is the right age, for women to start investing from a retirement perspective?
Whatever data are available to us, the average, lifespan of women is far more than average lifespan of a man. So retirement planning is more important for women class, right? Because they are going to live longer, right? So there is no suitable time for planning for retirement. The earlier, the better.
We have seen women managing money far better than men. So today, when we discuss with a couple most of the time, later on we are seeing that when you do a review of the portfolio or something, is where the women are actually taking a far higher interest in the same thing, and they turn out to be really good. So it is definitely a crucial aspect for both of them.
Well, the other wonderful opportunity we got as part of the UTI Swatantra series was to partner with the FICCI Ladies Organisation Delhi chapter. We went to Delhi and organised a specific event to educate members of the FICCI Ladies Organisation in investor education. Take a look.
That we're doing today exclusively for FICCI FLO and YFLO members at the FICCI headquarters right here in New Delhi.
Let's start with the basics here. What exactly is a mutual fund?
It's a vehicle which gives you access to any asset class that you may want to access. So whether it is equity, whether it is bonds, whether it is gold, whether it is real estate, there are options available within the mutual fund industry which can give you access to any of these investment avenues.
How does one begin investing in mutual funds?
To experience that what a mutual fund is, you could probably start investing in a very, very simple basic scheme, which is a liquid fund, which will only give you a small return, but it is fairly safe.
The second thing is that when you're looking at long-term investments, you look at a good diversified mutual fund, a good diversified equity fund, which has at least a 10-year track record, and maybe start a small systematic investment every month into that kind of a scheme. You need a certified, experienced investment planner for you. Now, how does one find about such a person?
Look out for a financial advisor who owns the company, who is an independent person. That person cannot run away, okay? And they are very conscious about their brands, right? Secondly, there are financial planners who charge you, okay, instead of charging, instead of getting a fee from the mutual fund, okay? That is more in your control. So they are then motivated to perform for you.
How is FMP as a asset option, as an investment option?
Fixed maturity plans are a dead part of the mutual fund. So what they do is they invest for a fixed duration. So FMPs are good for people who I mean, if they know that the money, they will not take out the money in between, because otherwise there are exit loads in the fixed maturity plans.
It's time for us to take a very quick break, but when we come back, we'll talk about how we traveled across the country and the various investors we met on our way. Don't go anywhere. Welcome back. You're watching the final episode of the UTI Swatantra series powered by ET Now. As part of this series, we also travelled across the country. We went to various cities and met various investors. The most interesting part about our travels were the questions that we encountered across the country. And we realised that the need for investor education is basic and uniform across India. Take a look. We're just going to do a very, very basic 101 class.
I want to ask that what is the ideal time for making investment? Right from the time I get my first job and my first salary, when is the right time?
What's your age?
19.
19. So this is the right time, and the best thing can be start SIP at the earliest.
500 rupees a month is all you need to start an SIP.
Absolutely.
Take it out of your pocket money, take it out of your piggy bank, start today. It's okay if you make one or two bad decisions because you have so much time to correct it.
For me, in this age, SIP is the best option. So, sir, I'm not educated about what to invest upon. So, sir, how will I start about it?
If you're not getting down on the road, you will not meet with the accidents, but you will not learn from it either. So, start small. Don't be so obsessed about whatever returns you're getting on a 1 year or a 6 month, 8 month time frame. Have for yourself a longer time frame, and I think you'll be good for the road.
There are large cap funds, mid cap, small cap. So at this age, which fund we should choose?
See, it all depends upon your risk appetite. So if you are a high risk investor, I would prefer you going in for a mid cap, because today's mid cap will be tomorrow's large cap. There is a very good saying, large cap will always protect your money, but mid cap will create wealth for you.
Before doing any investment, there need to be a goal orientation. Without goal orientation, no investment should be done. So I would recommend to first set your goals and then only start looking at investment. Don't do random investment.
For monthly income, FD is the only option for senior citizens, or any other portfolio is there?
Plenty of options available in mutual funds themselves for senior citizens. Actually, the best way to get your regular cash flow for yourself is using a systematic withdrawal plan.
Is there any option available in this huge market of mutual funds where I just put in money and forget it?
I'll just put a point. You think you are putting in the safe money, right? So in last 30 years, average inflation has been what? 7.5%, 8%. And your FD return would have been, say, 10% average, because in past you were getting higher return. But what is your real interest? What is your real income? 3%. And post-tax maybe 0. So are you in the safe zone? So you have to question that. And second thing, if you don't have time, I'll definitely suggest take an advisor's opinion.
When we began the Swatantra series, we were very clear about one thing. We would not limit ourselves to Tier 1 cities. So we also made it a point to widen the net of investor education. It allowed us to travel to Tier 2 cities like Bhopal, Patna and Chandigarh.
what mostly I've realized in North India, what mostly we do is either a fixed deposit or a real estate. And probably 90% of the portfolio is inclined towards real estate. Not many people know this particular asset class called mutual fund, and we consider it as a risky thing. It is volatile, but not risky. You got to understand the difference between these two.
By what minimum amount I can start investing in a mutual fund, and what is the ideal time period for maximum gain?
The minimum investment is 500 to 1,000. You start with the 500 and 1,000 also, sir.
There are three things you should keep in mind. One is you should start early, invest regularly, and invest for long term. I think these are the three thumb rule which is more important rather than timing the market.
The power of compounding. The more time you give to your investment, more it is going to compound. So it doesn't matter. You have to take a call. How much time do you have got?
I'm 15 years old, and at this age I can't earn, but I get pocket money. And is there any scheme for you that I can invest my pocket money? And what are its benefits?
Most young children are not even bothered about these things. They are interested in enjoying their pocket money much more than savings. So I congratulate you on your amazing thoughts. First of all, what you need to do is help your, request your parents to open a bank account for you as a minor in any of the bank accounts that are, banks that are around your place. And once the bank accounts are opened, then you could put your pocket money into those savings account first, and then get a proper financial advisor to help you, advise you on which funds. There are funds which allow you to save as low as 500 rupees a month, and some of them I hear allow you to save as low as 100 rupees a month also.
The thumb rule says, as I know, that you must invest in equities 100 minus your age.
Yeah.
Is it to be rigidly followed?
As you said that 100 minus age, that is not very rigid. That is, you need not to follow that. It depends upon a person to person. Say if you are getting good monthly pension, good rental, then your accumulated amount, what you accumulated over a period of 60 years, when you work hard to earn that money, you should park that money and you should do a asset allocation for that. Say 60 to 70%, 60% in debt, 40% in equities. You can do like that asset allocation.
Well, that brings us to the end of the UTI Swatantra series. I want to thank you for your support through this entire year. And I want to point out the fact that while we got started this year, so much is left to be done in terms of education of investors and you and me and our financial learning. So remember, even though the show ends now, our website continues to be active. So if you have a question for us or you'd like to get in touch with us, feel free to log on to the website beswatantra.com. And of course, I'm going to leave you with voices of people who joined us across the country during this series and were part of our journey.
This is very good initiatives by the UTI and UTI now.
Investor education was the missing piece in the entire journey in last 10 years. So I think they are just trying to create more and more education piece, which in turn are going to make much more powerful and empowered investor.
This is just the right time to motivate Indian investors to take a call on equity and have confidence towards equity and mutual fund products.
I feel this kind of an initiative will empower an investor to understand what is good for him and what is bad for him, and he can take a more informed decision.
It will go a long way to cover up tier 2, tier 3 cities, and at the same time, reach out to the masses, so that they should start investing at the early age.
This initiative, which is going from city to city, involving all the advisors, all the investors, all the top shots of the city, is a wonderful thing, and I think keep up the good job, and I hope to see this to the next level next year.
For an uninitiated investor, I would say be Swatantra, be free, and that's where the mantle begins with, where this knowledge is supposed to spark or instill or nudge you enough to take that very first step that you probably have been delaying or procrastinating. But if you don't start early, you will always feel that there was this little gap in what you aspire to achieve through your wealth creation.
Brought to you by UTI Mutual Fund. Haq ek behtar zindagi ka. Mutual fund investments are subject to market risks. Read all the scheme-related documents carefully.